We welcome Gian Maria Milesi-Ferretti of the International Monetary Fund, Deputy Director of Research, to Maurice Obstfeld, of course, who's recently left the IMF. And what's so important about this important update today, I want to go, everybody talks emerging market, China. Can we just talk the advanced economies and a relatively grim outlook?
We have more of a slowdown in advanced economies that we were envisaging just a few months ago. That's true. In particular, we've had relatively bad news on the macro front in the euro area, much weaker output growth in the third quarter, in Italy, in Germany, and the signals for the fourth quarter were also weak.
You walk through the nuances, and I kid Madame Lagarde that she's got a baccarat crystal ball. It's a French crystal ball, of course, and that it's unfair to ask the IMF to be perfect. You're bringing down your global outlook as a general statement in measured steps. Does that trend continue?
This is our baseline. So we think this is our most probable scenario for the global economy. But we do acknowledge that there are many risks out there, and unfortunately some have risen. So the likelihood of a downward revision is higher than the likelihood of an upward revision.
And I mean, within this, and going to the numbers within the WEO update, is a 1.7% statistic for the advanced economies. There's some other grim numbers. And frankly, the United States, 1.8% a couple years out. Take that new low real GDP and tack on a more tepid inflation. The animal spirit seems to be dissipating from the system.
Well, we have, the U.S. comes out of a very protracted expansion.
Yes.
Unemployment is very low. We are very happy about that, but it cannot continue to grow much above its potential growth rate for a very long time, simply because the unemployment rate is already so low.
Fold in the work of all of the PhDs at the IMF, the Blue Book, the World Economic Outlook, which you are most associated with, Professor. Fold in as well the Brown Book, the Fiscal Book of the moment. How are the fiscal dynamics in the update?
Well, they're not much changed from October.
But in the United States, we are seeing a potential debt expansion.
Yes, the same trend that we highlighted in October. Clearly, in the U.S., we have what we call pro-cyclical fiscal policy. We have the economy virtually at full employment, but a large fiscal deficit. And that is something that will have to be addressed.
Now, for the Bloomberg world, I've got to get off script here, and that your research with Philip Lane of Ireland has been definitive on the integration of our nations. Are we better protected now from a financial crisis than we were in 2006 and 2007 because we're more integrated? Or is the populism that's out there, do we risk being less integrated in the coming years?
We risk being less integrated in the coming years. I would say some vulnerabilities have gone down because the financial, in particular the banking system in some key economies is in a much stronger footing than it was in 2007, 2008. But threats to global integration are there, without doubt. The trade tensions being a prime example of that, but just questions on multilateralism, and those are clearly things that worry us.